Welcome back. Today it was reported existing home sales in April fell 3.4% from the prior month to an annualized rate of 4.28 million. This is from the National Association of Realtors. The annualized rate fell short of the 4.3 million estimates. Now, on the surface, this is negative news. We're going to take a look at a number of charts speaking to the housing market. And they're going to tell a different story, but I think also negative news, but in a different way. We're going to first take a look at the housing inventory. This is the active listings, the count of the active listings for single-family condos, townhomes in the U.S. We're also going to take a look at the median listing price per square foot. Now, here is in blue the active listings. This is the inventory. It has dropped a number of months, while the red line, the XHB, trends higher. The XHB is the ETF, the exchange traded fund that most accurately reflects the housing market. It's made up of different home builders and housing related stocks. So the housing stocks have been rising while active listings fall. Now, like I said, this is negative news, but not because of the reason I think that most articles will state. It's negative news because it just means for somebody that's out there looking to buy a house, the conditions overall have gotten more difficult. In addition to higher interest rates, we're not even talking about interest rates. We're just talking about, for example, the active listings. We're just a little bit above 550,000 as opposed to highs we saw at the end of 2022 at 750,000. So to simply put, the number of listings out there for prospective buyers is less. Now we take here the price per square foot versus the XHB, the Home Builder Index. The price per square foot is right around 222. This is coming off of lows of 213 and trending higher. We have not yet breached the recent swing highs of 227 accomplished June of last year, but not that far off either. June of last year, by the way, is very significant because that marks the beginning of the inverted bond market yield condition that we've talked about here for quite a bit. And that really spells the beginning of a lot of the difficulty in the market. Well, the housing stocks are rising, not necessarily because I think home builders are doing better. In fact, there's other articles that speak about the fact that the home builders are forced to build smaller homes because, consumers just can't afford the big homes out there. But the home builder index is rising as a result of price per square foot that's going up, active listings which are falling as well. Here's active listings versus in green the inventory, the price per square foot. And we can see it's a logical correlation. When the active listings go up, when there's more homes on the market for sale, such as orange histogram bars, October, November of last year, the price per square foot goes down. However, we're seeing the inverse right now. The price per square foot is going up because there's just less homes on the market. We're going to take a look at median sales price of existing homes. Remember, that fell short of estimates. And the median sales price of existing single-family homes. Here's a correlation, again, in red, XHB, the Home Builder Index, versus the sales price of single-family homes. It has now crept up to levels around 393,000, almost 400,000. That's after accomplishing pretty significant lows around 365. That was back in January of this year. So we're going to see this pattern continue where it looks like the home builder index and the housing industry is recovering despite higher interest rates. But I think that if we were to look beyond the numbers, we would see, well, maybe there's less active listings out there. Not because people are, buying homes left and right, especially with higher interest rates. I just think overall business has slowed. There's less homes being produced. There's less homes being built, so to speak. Here we see in blue the median sales price of existing homes versus XHB. Both are rising to the upside. But again, I don't think it's because the housing market is booming. I just think that there's less homes being built. The inventory is shrinking. because, there's still people out there buying homes, but there's just less homes available because of a slowdown in business. We know this from the manufacturing numbers we've seen recently. Here we see in yellow the federal funds rate, now just above 5%. The red line shows single-family homes. The blue line shows the median sales price of existing homes. The red line's the sales price as well of single-family homes. Both have jumped higher despite higher interest rates. We would expect low interest rates to be a positive for the housing market. That is the correlation that we normally logically expect, like we saw early part of 2022. But notice what happened. These lines start to move down as interest rates rose. Interest rates rose. Remember June, that's right where the inverted bond market started. So why is this turning around? I don't think it's the result of a stronger industry. I think it's a result of lack of activity, which has really caused a decrease in the inventory out there. And that leads to everything else, the price per square foot and all the other metrics that we talk about. Here's a very simple comparison between the federal funds rate and XHB. Interest rates go up as the home builder stocks go up. That's not logical. This is not something that we would normally expect to see. We see here in green existing home sales monthly supply versus the XHB. This, I think, is a little bit more revealing because a monthly supply has not really, acted as we would hope, or we would not hope as we would expect based on the prior charts. Well, we'd expect the XHB to go down. The XHB to go up. XHB, again, is a home builder index. We'd expect that to go up when the monthly supply goes down. But the monthly supply is kind of wavering right in the middle. Here's a correlation between how existing home sales, the housing inventory, and the home builder index. This is a little bit more logical as the inventory is low. That tends to bode well for home builders because they get to charge more. But I think that like a lot of economic numbers, there's substitution that takes place. For example, when we talk about inflation, we talk about the CPI, the Consumer Price Index, and the PCE, the Personal Consumption Expenditure. They both measure the rate of inflation. One of the core differences is the PCE, the Personal Consumption Expenditure, allows for substitution. So if we can't afford an expensive car, we buy a less expensive car. But that is understood, so to speak, within the numbers, and the numbers still rise despite the fact we're buying a less expensive car. Here we talk about the housing inventory. This is the median number of days on the market that a house will sit. That is shown here in gray. We saw at one point, January of this year, the home on average sat on the market for 74 days. That has now decreased to 49 days. It means that our buyers scooping up homes that much faster, especially with over 5% interest rates. I just think that there's less homes being produced out there. And as a result, I think this is a false positive signal, so to speak. This is in orange, the federal funds rate, and again, median days on the market that the housing inventory overall will sit. And the housing inventory, again, is falling as interest rates go up. We would expect the opposite. In fact, we did see the opposite. Notice from April of 2022 through January of this year, both lines were moving higher. That's logical. Higher interest rates, the more the house sits on the market, because investors and consumers out there will say, I can't buy a house, interest rates are going up. But something changed. Something changed at the beginning of the year. Maybe it's a slowdown in business, and maybe it's something we really don't know about yet. This is interesting. This is the correlation to the XHB among different economic numbers. So if you ever wonder, well, what economic number should I really watch if I want to trade the XHB, the Home Builder Index? What number really has the strongest correlation? Well, we can see here the affordability index has a 53% positive correlation. If it was a 100% correlation, they would move literally lockstep, 1 for 1 point for 1 point. 53% is a strong correlation. The existing home sales monthly supply has a 63% inverted correlation, which means that home builder stocks go up as existing home sales, the monthly supply goes down. That makes sense. See, this really contradicts the charts that we saw here right now. So it's important for us to always go back and try to understand, the premise behind the economic numbers. What are they showing us, and is it logical? Well, let's take a look at the affordability index in particular. Again, a 53% strong correlation to home builder stocks. The housing affordability index essentially measures the degree at which a typical family can afford the monthly mortgage payments on a typical home based on fixed mortgages. Now, a value of 100 means that the family with a median income has exactly enough money to qualify for the mortgage of a median priced home. If the index is above 100, it means that that family has more than enough, better. If it's less than 100, the family has less than enough. And this is assuming a 20% down payment. So again, when the number's above 100, that's better. Well, the green line here is the XHB. That's a home builder index. The red line is the affordability index. Again, a 100 level means exactly that the average family income, assuming a 20% down payment, can afford exactly a median priced home in the country. When it goes below 100, that means we can't afford, the home so well. And we hit actually a pretty significant low, October, November of this past year. Well, it has risen to a level of 104, but now currently sits at 98.6. And this is actually pretty revealing that we see there's a strong correlation. Home builder stocks go up as the average consumer, the average family can afford these homes. However, we can notice the difference. And we try to, keep these charts in some sort of a relative, comparison. The Housing Affordability Index, take these lows of October of last year, it went up. The XHB also went up, but it looks like, just visually speaking, the XHB went up to a greater extent. Now, these charts are not exactly to scale, so you have to, build in a little bit of a room for error, as far as comparison is concerned. But it certainly looks like the XHB has gone up to a greater extent than the Housing Affordability Index, and I think that really tells a story. The home builder stocks are going up, but they're going up without strong evidence from the housing market. The numbers in the housing market do not look as good as a home builder stocks do. Now, what does this mean in terms of a trade? Well, we're not giving a specific trade recommendation. However, those investors out there, those traders out there are saying, well, maybe the housing market, maybe these stocks are a little bit too rich based on the numbers. The prices are a little bit too lofty based on the numbers. Let's say, we have a long-term investment in the home builder stocks. Well, looking at the data this way, it does suggest that the home builder stocks are overpriced based on the data that we've seen. And that would be a good time to either take profits, even perhaps sell shorts. However, taking the other side of the trade, if we're, optimistic, if we're bullish in the housing market, I want to see evidence. I want to see future numbers start to look better and better. I also want to see that from 5,000 feet up, I want to see the Federal Reserve say, you know what? I think we're done raising interest rates. I think that maybe it's time to cool off. But that's a double-edged sword. The Federal Reserve is only going to say that if they start to see negative numbers, meaning inflation is coming down. Not only inflation in a bad way, but also our wages are going down. And our ability to consume fuel and consumer products, that's going down. So it's really, there's a lot of different angles to this. What could be a positive actually could be a negative, if you look at it from the other point of view. But to go back, it looks like the housing stocks reflected by the XHB have moved ahead of the economic numbers. Is this a case of buying the rumor, selling the news? In this case, I want to see the next numbers really start to show some progress. But conversely, if we think that maybe the housing market, they don't have it right, maybe then, fundamental investors like us, we see weakness out there, maybe it'd be a good time to, take some money off the table while these stocks are so lofty. So we're going to watch the economic calendar very closely, and of course the market reaction to all of our numbers as well. We hope this has been helpful. We look forward to seeing you back soon.